Okay, good afternoon and welcome everybody. This afternoon is the webinar on VAT on school fees and obviously the essential strategies for private schools going forward. I am Sandy Cochrane, a VAT partner here at Gravita, and my colleague Shona is also audit partner here at Gravita. Before we go into the webinar, I'm just going to give you a little bit of an overview for those who don't know Gravita as to what we do. So as you can see on this slide, Gravita, we are a full service accounting firm and advisory. We're in top 30 league. We have 400 plus staff, and our services comprise of everything that you can see on the right hand side there, including of course VAT, which is at the end. We're also a member of the DFK International Firm, which is one of the largest associations of independent accounting firms that gather together, and it gives us that strength and breadth to be able to advise our clients from not just a UK perspective, but an international perspective. Our expertise lie across a number of sectors, and we do specialise on technology, education, of course, and charity, and real estate and financial services. And we do pride ourselves in how Gravita transforms how our clients receive those services, and basically trying to provide a holistic approach with the unique proposition we have in the market. So like I said, I'm Sandy Cochrane. I'm a VAT partner here at Gravita. I've been here for nearly 3 years now, very much a general practitioner, been advising VAT for about 40 years now, having spent my early career in industry and then going into an accounting firm back in 2001. And Shona, if you'd like to introduce yourself. Shona, if you'd like to introduce yourself.
Yep, sure. I'm Shona Munday. I'm an audit partner here at Gravita. I have a wealth of experience in audit and public accounting, having trained back in 2000, which is when I started my career. I've also had a bit of a stint in industry where I worked at the University of Bedfordshire, so I've seen things from the client side of things. I specialise in education and charities and SMEs.
Thank you, Shona. Okay, so back with me again. So VAT, I thought it might be a good idea to actually explain a little bit about what VAT is. Obviously, we're seeing that, you know, it's going to be applied to school fees, but I thought it'd be good to sort of take a little step back. What is VAT? It's value added tax. It is a consumption tax, and it's levied on the value that is added at each stage of a process. So you can have somebody manufacturing goods or providing services to another party who then enhances those goods or services. As it goes through the chain, as the value goes up, and the VAT is added on that that final supply. It is a consumption tax, so you know, at the end of the day, normally private consumers like you and I will bear the brunt of the VAT, and that gets paid to the Treasury, in a nutshell. And the primary purpose, why is VAT levied? The primary purpose of VAT is to generate revenue for the government. And as we probably heard, you know, in the case of schools, this is to generate more funds to enable state schools to employ more teachers and to get the education, you know, with more people in there to educate more children. When is VAT due? Well, that is going to be a good question, and we're going to learn all about that from a school's perspective as we go through this presentation. And hopefully it will help you, everybody, just understand why we do what we do, when it needs to be accounted for, and some of the advantages of being VAT registered. So we talked about, you know, when is VAT due? Following the announcement that VAT's going to be levied on school fees, from the 29th of July, any fees that have been paid to schools will be subject to VAT. there was a lot of talk about prepayments and, parents that can afford to pay years and years of fees in advance. HMRC appreciate all of that. They understand all of that, and they're going to be looking at how schools have accounted for VAT. But the requirement as it stands off today, that anything those schools have received from the end of July this year, subject to VAT. We all know that hopefully that there's going to be this mandatory VAT registration requirement that comes into effect from the 1st of January. And yes, it is a pain because it doesn't fall in line with the academic year, but there are things that we can do to take advantage of that registration. I'm also going to be talking about voluntary registration and in some cases retrospective, or where schools have been already VAT registered. So schools that are already VAT registered, surprise, surprise, yes, there are schools that are already VAT registered. It can be based on a number of things that they're doing. Something that Shona will be talking about later is about, how we can diversify. Schools sometimes are already doing that. They're already providing facilities to other schools or to for wedding events or any events that are taking place. So those schools are already VAT registered to account for VAT on those supplies. However, things are going to get complicated when we add in the school fees and all of the other income that I'm going to come on to in a little while. Schools are also, some schools are already VAT registered because some of the expenditure that they incur, and it is a slightly complicated regime known as the reverse charge mechanism, but where certain schools have bought services from non-UK suppliers, for example, Google Ireland or, the likes, that will be subject to the reverse charge, which does require a VAT registration, and therefore schools can be VAT registered on that basis. So we've got schools that are already VAT registered, those that are going to become VAT registered, but what we are also going to consider later on are the implications of partial exemption. So just picking up on the reverse charge, and I've just got a little bit of a diagram here that shows the impact. If you've got basically a simplified VAT return with the box 1 to 9 entries that are made. The first column that's headed up fully taxable looks at the costs that are being incurred. So the cost at box 9, £100,000. That is normally what you'd put on a VAT return. But for VAT purposes, the reverse charge mechanism requires the recipient of certain services to account for VAT as if they both made and received the supply. Now, the reason that HMRC have introduced this is to ensure that businesses and schools now that are VAT adverse, unable to reclaim all or part of their VAT, don't go shopping and get non-UK advisors to give them the services without having any VAT applied to it. So the reverse charge mechanism came in. It applies to all businesses, irrespective of whether they're exempt or not. Like I say, what we need to do, as well as the cost coming in, we do a deemed supply. So the first column, fully taxable, shows £100 going at box 7 as our cost, as our net purchase. We then add VAT to that purchase, which is at box 4, £20,000. So 20% of 100,000, to keep the calculation simple, is £20,000. That's our cost. We've then got to do the deemed supply. So we put £100,000 in box 6 as our sale, the supply, and we put the 20,000 in box 1 as our sales VAT. If this was all that was on the VAT return, the amount at box 5 for a fully taxable business is 0, because they can claim all of the VAT at box 4, but contract out the VAT on the sales at box 1. So I hope that makes sense. So for schools, if they had incurred costs, and this is why they are VAT registered, current threshold being 90,000. If the school has incurred costs of 100,000, we know that's over 90, that school would need to register, irrespective of whether school fees are VATable. This is just looking at services that are coming in from non-UK suppliers. So at the moment, for a non-VAT registered school, if it was receiving services from a non-UK supplier, it would record that net cost at box 7. It would record the net sales at box 6. It would record the output VAT, the sales VAT at box 1. But because all of its supplies would be exempt prior to the school fees, it wouldn't be able to recover any VAT on the cost, and therefore the cost to that school is £20,000. So now we move ahead. We've got a VAT registered school. They've got VAT fees that are coming in. They're VATable. They've got exempt income. We're coming on to this later, but just bear with me. So, and the last column, this calculation shows that, hopefully I do my maths correctly, we're looking at a school here that has got 70% VATable income. So theoretically, 70% of the VAT that they're claiming can be recovered. So you can see the difference between the middle column and not recovering VAT, and now the ability to not recover £20,000, but a fair proportion of it. So how do we apply partial exemption? It is complicated, it's not simple, and yes, you're going to need some help. But what I've tried to do here is look at the types of income that schools receive and allocate them to what we think they're generally going to be, and there are a few question marks. But the first thing that the schools do need to do is understand the VAT treatment of their income, because it absolutely impacts the calculation. Before we do partial exemption, what we need to identify is non-business income and expenditure, because that comes out of VAT totally. Non-business income are items like bursary income, funding, charity income. So where we've got funding, we're coming on to that again a little bit later, but there'll be funding that's freely given. There'll be, as I say, the bursary and charity. All of that income needs to come out of any VAT count. Directly associated costs will be removed. If you're not in business, you're not VAT registrable, and you're unable to recover the VAT. So we take all of that and separate it. We're then left with the income that will either be subject to VAT, and it can be subject to VAT at different rates. As long as it's a positive rate, it's still a VATable supply. So we'll have standard rate, and we can potentially have some zero rate. Down the right-hand side, you see that obviously school fees, yes, they're VATable. We all know they're VATable now. But as boarding fees, so where schools have actually got boarders, the fees for those pupils are also going to come within the scope of VAT. There are some exceptions. Nursery fees, they are going to remain exempt. Hopefully we've all heard about the application of the school fees, the age group that it's targeting, and the type of schools or further education that this is being captured. I've talked about non-business. Sorry, thank you. I talked a bit about non-business. We're talking about, typical things that schools do provide and receive money for. I put school meals as exempt there, and I am going to talk about that in a moment. Registration fees are what they are, and I put a question mark on after school clubs, because we do need to work out whether or not these are welfare and then they fall within the exemption, or whether the after school club is educational and therefore would be subject to VAT. We then talk about school trips and whether or not the tour operators margin scheme, which is what TOMS stands for there, whether or not that will be applicable, whether transportation and TOMS will be applicable there. I've put interest income because there's quite a lot of schools that earn interest, you know, if they are, I don't know, agreeing a payment plan with their parents, they may add a little bit of interest for, you know, agreeing this payment plan. That interest will be exempt. So again, when we're sort of doing things with school, it's really useful to understand the implications. The more exempt income the school has, the less it's going to be able to recover. So we do need to be really careful in one, the classification, and one, ensuring that what we're offering is not going to get the schools into some kind of trap. So there's talk about closely related goods and services and the treatment thereof. At the moment, HMRC's view is that closely related goods and services do include books and the equipment in order for the pupil to learn and to be educated, but catering is not one of them. We go to school, we get educated, and we do have our lunch or whatever at school, but it's not considered closely related at the moment, and therefore that is still being treated as exempt. And what that means for schools is if that's exempt income, any cost relating to the catering will be irrecoverable. And a lot of schools do actually buy in catering. And so it's something to think about. Travel, as I said, you know, if we're taking children out on school trips, excuse me, generally speaking, as long as there's no profit that's being made from it, there's not really a requirement to account for anything under either the tour operator's margin scheme or otherwise. The exam costs obviously do fall into closely related services, but certain costs can be treated as a disbursement rather than an expense. And if you're passing on something as a disbursement, again, it doesn't normally come into the scope of VAT. So depending on how the exams are purchased from the examining boards, the invigilators, etc., etc., they can fall into one camp or the other. What I did want to talk about today, I mean, it's quite a lot for people to take in, because not only have HMRC announced that that's being applied to school fees, this is a very nuanced area. I mean, partial exemption, capital goods scheme, you throw it all together and it can get quite complicated. But just broadly, we've all been hearing that VAT may not be a good thing, but it may not be a good thing, but it may not be a bad thing either, depending on the spend of the school. Now, capital goods scheme for VAT purposes comes into play where expenditure on property, I'm going to keep to property, is in excess of £250,000 or more for a project. Now, bearing in mind, schools have just come back to the new term. Schools tend to do a lot of building and construction work in the long summer holiday period. So this might be quite relevant to a number of your contacts out there. And to give an example here, two calculations, because we have the partial exemption and we have the capital goods scheme, and lo and behold, they don't work in tandem with one another. So there is the potential to do two types of calculations. But broadly speaking, what I wanted to demonstrate here was that if a school has incurred a cost of £600,000 gross, so 500,000 VAT, let's say they've built a load of classrooms, and not for a nursery, obviously. So classrooms for fee-paying students, they spent £600,000. Ordinarily, that £600,000 would have been a cost to the school, and that VAT would have been written off. However, if that expenditure, as I say, is in relation to an area of the school that's going to be used for taxable purposes, there is scope to recover some of the VAT and over a future period. The example I've given is using that 500,000 net and the £100,000 VAT. Now, in this case, the cost was incurred in 2021. And it's a bit of a misconception that we look at the 10-year period, which is the period covered by the capital goods scheme, when we look at the use of the asset. So we've spent 600,000. You look at the use of the asset over a 10-year period. When does that 10-year period start? It starts from when the asset is used, not from when the money was spent. So brilliant. We are now going to be using the asset from January 26. Now, all of this I'm just giving you as examples, so please don't take this as a given. All schools are different, and things may be different for individual schools. But as I say, this is an example. So using schools academic year, generally those that are VAT registered or will become VAT registered will have VAT returns that fall at the end of May and subsequent quarters. A subsequent quarter being the 31st of August, which ties in neatly with the end of the academic year, hence that VAT period. And just why I've used it as an example here. So under the capital goods scheme, very, very broadly, we take that 100,000 and we look at the 100,000 over the 10-year period. So let's say use started in 2026. We look at the use up until 2036. And what we could do, that roughly equates to £10,000 a year, if my maths is correct. Yes, I tried to do the math, so it works. So it's £10,000 a year that we could potentially get back, subject to the partial exemption calculations, of course. But we will have a finite period, perhaps at the beginning, where we may be able to get, in this case, £4,000, because if we take the £10,000, divide it by 12 months and multiply it by 5 months, we should get £4,000. So basically, you're getting a little bit of money back for expenditure that may have incurred a couple of years ago, because we are now using those assets, hopefully, for taxable purposes. So I alluded to this earlier. So tour operators margin scheme, it involves the buying and selling of accommodation and transport and things that you normally sort of think about a holiday comes with, but we apply this to school trips. If there is no markup, then there's no requirement for VAT to be even considered. It's only when there's a markup. So again, when Shona talks about, thinking about diversifying, be very, very careful, because if you're thinking of adding a markup and saying to parents, well, actually, we can get a bit more money here, be careful, because the money that you may be getting may need a VAT cut to it as well. So be very, very careful there. I've got school transportation. Again, school transportation can comprise of different things. You can have those pupils that are just, going to their local coach bus stop to get the school bus into school that they pay for, or it can be to do with school trips. So again, be very careful as to what category this is going to fall under. Okay, and I mentioned earlier that holidays and after school clubs. So a lot of schools do provide holiday care for their pupils and after school clubs. The question mark is, how do we treat that for VAT purposes? And in order to determine that, we need to ask the question back, is this a provision of care, i.e. are the staff there qualified first aiders? Are they providing welfare, looking after the students in a safe environment? Or is this actually an extension of school activities? So they are providing maybe arts and craft lessons, maybe, I want to say sports, but again, that depends. But, if they are providing lessons in these after school clubs, be careful, because that will attract VAT in the same way that the school fees do. So be careful on categorisation there. And then we talk about special education needs again. You know, there's been a little bit of discussion in the press. SEN obviously is the terminology for England. We've got different terminology, but basically the pupil needs to have this care package in place for the local authority to fund their placement into the school. It's still VATable. It's still VATable for those pupils, but in this case, the local authority itself can make a claim under what's known as a Section 33 to recover the VAT that they've actually paid out to the schools. So there is support for pupils with special needs. The packages are called something different depending on where you are within the United Kingdom, but they're, you know, the whole point of the government trying to put some sort of easement here and the local authority is to address that, you know, the pupils' needs do need to be catered for. And if it's a private school can only do that, then those pupils should not suffer the VAT. But hopefully I'm clear on that. They need the package to be in place. They'll get the funding from the local authority. Local authority be out of pocket, because they themselves can make that claim under a Section 33.
Wonderful.
And I'm going to hand over to Shona now to do her slides.
Thank you very much, Sandy. That's been really interesting. So we've obviously heard a lot of things in the press, and you only need to read the various different newspapers out there, and we see sort of big horror stories about what's going on. And there's this idea that there'll be 10,000 pupils not going to private schools in future years. Now, that may be for a number of reasons. That might be because actually the birth rate is dropping, but it may be that actually people are choosing to make a different decision for their child as to whether they can now afford to send their child to private school with if the schools are having to pass on the full 20% in terms of VAT increase. So as pupil numbers are potentially dropping, it's really important as a school that they start thinking about differentiating yourself from your competitors and making sure that you understand your unique selling point so that you can advertise yourself and make sure that the pupils are coming to you rather than to a competitor. And we all know that facilities are key. When parents are coming around, they want to make sure that we see beautiful, well-kept buildings, superb sporting facilities, all of those sort of things. But actually, from a school's perspective, you need to have an appropriate programme in place to make sure that those facilities are maintained. It's really about being proactive rather than reactive, because actually having these sort of things in place will actually help you save money, which essentially, if you're losing pupils coming on board, you're losing fee income, and therefore this is about looking at how you can save costs. So have a proactive program of works in place rather than reactive, because actually spending now to fix the roof is probably going to be more cost effective than to leave it and having to do a whole roof replacement in the future. Now, as part of the whole process of running your school effectively and making sure you're getting cost savings, is about understanding the information that you're getting about your school. Now, information is key. So it's about thinking about your systems and processes that you have in place, and are they actually up to standard? Are you getting the information that you need from your systems? Does your accounting system work for you? Are you able to identify whether things are profitable or not? Particularly important if you're providing transport. Is that school trip profitable? If it is, then you know it may well fall within the TOMS regime. If not, then it's a different decision that can be made. So your accounting system needs to be able to give you the information you need. But beyond the accounting system, are you tracking staff utilisation rates? Are you thinking about pupil staff ratios? How does that work? Are you getting the best use out of your team members? Now, in business, we all know that cash is king, and that's no real difference in a school. At the end of the day, we need to make sure that schools are collecting their money, making sure that they don't have any large debts. So having processes and procedures in place to collect those debts is so key, and making sure that they're followed up, and if debts are left to sort of go old, that they're followed up regularly and quickly. The other thing that's really important about making sure that you're running your school effectively and making sure that you're looking at your costs is having a proper plan in place. It's really important that, you know, in most businesses, they have sort of strategic plans looking at the 3 to 5 year. It's making sure that your schools have those in place and that you're really starting thinking about, you know, what are the financial implications of the things that you want to do, particularly from an educational perspective, or improving those facilities, or looking at providing different services. All of those things need to be factored into the plan so you can really think about the consequences. Sandy's gone through lots of different things about the income streams, and you really need to think about those when you're planning, because you may decide to do something that then has unintended tax consequences now that you're going to be VAT registered. Okay, now the other side of things is to making sure that you have an effective engagement program so that actually you're communicating effectively with your stakeholders and making sure that alumni know what you're doing, and really thinking about further cost saving measures to make sure that you're getting the best outcomes. Now, just speaking about cost saving measures, this is more important because business rates charity relief is being got rid of for private schools. Now, this is a devolved policy, so actually the current announcements are only relating to England. So if you're in Scotland, Northern Ireland or Wales, it may be a little bit different. But essentially, the government's current plan is that from April 2025, they'll be removing the business rates charity relief, which effectively means that the 80% discount that those private schools that are charities will effectively lose that discount. And now for some charities, that will be a big impact on their bottom line, because obviously an 80% discount is significant. And it's estimated that about 50% of private schools in England are actually registered charities, so they will be currently benefiting from this relief. And therefore the removal of this makes it so important to look at where you can make some real cost savings. Now, I'm sure most of you are doing lots of things around cost savings. Obviously with schools, staff is one of those big costs. I'm not really going to talk about that because I think most people have already looked at those sort of areas and looked at pensions, and there's lots of different changes in the sector going on there. So I'm thinking about other things that you could potentially consider. You can think about automating your administrative tasks, making sure that you're making best use of technology and AI, making sure that you're actually making it easy for parents to pay rather than having to have someone collect debts constantly, make it so it's easy and it can be done electronically. Make sure you're communicating effectively with either your team members, but also your parents, so you're not having to send letters out. And again, it will save time and effort, but also reduce consumables. Lots of children are now getting used to bringing their own devices into school, and obviously most schools will have lots of laptops and tablets that they use in their lessons. And again, it cuts out the need for printing things off and expensive colour copies, those sort of things. I mentioned previously the preventative maintenance programs. That's a really important thing, but also thinking about actually when are you going to replace assets? When do you need to think about that? You know, look to the future to make sure that you're thinking about potential expenditure, and again you can plan accordingly, especially when you're thinking about the capital goods scheme. You might want to think about how you're going to use those assets. Are you going to use them for a VATable supply, in which case you may well be able to reclaim some of that VAT. You may want to consider outsourcing certain functions because they could be effectively more cost effective. Classic one of these is maybe IT support rather than having somebody permanently employed. But also lots of people do catering. Now, Sandy's already mentioned if you do that, you might need to think about the VAT implications of that in terms of the nature of that supply. But also we can think about being energy efficient. You know, you can save money by swapping out those old-fashioned lights for LED ones. You can also think about getting grants where we can. Little things that can make a big difference. Another thing to think about is also considering partnering with local businesses. Can you get some income from sort of advertising revenue? Put some hoardings around your hockey pitch with advertising for local solicitors and accountants. All of these sort of things may well help to either bring you more income and also to save some costs. Now, income obviously is a big thing. Now, lots of you are already diversifying your income. Sandy's spoken about various different things that may fall within this sort of VAT regime, but it's really thinking about different things that you could do. Now, you could raise funds and hold fundraising events where you can really showcase your facilities and enhance your reputation in the local area, which will be fantastic for bringing in new parents and potentially new pupils. But you can also think about recycling schemes. Schools can earn money from collecting various materials, be that clothes or plastics or various different things. It's something to think about, and also will increase your green credentials, which a lot of schools are very keen to do. You can offer additional services. Lots of people already offer summer schools, but you could think about community lessons after hours to use your facilities, or other enrichment programs. But again, you're careful about these, thinking about whether they are VATable or not. You can have an alumni program. Lots of schools find that they can get some significant funds in terms of donations from past pupils, and they can actually help enhance the school's reputation and can actively help raise money for the school as well. Think about grants. Lots of you are obviously already applying for grants, but there are lots of things out there that can actually support the school. And this will become more and more relevant in terms of trying to increase your income stream, especially if you do lose pupil numbers. You can rent out your facilities, and lots of you are probably doing this in terms of your sports fields, but are you being creative? Are you thinking about renting out your buildings to film studios? Lots of you will have beautiful historic buildings which would be ideal for film backdrops. Some of you may well already be doing it, but thinking about weddings, can you hire out your facilities there if you've got a grand hall that would be wonderful for a wedding venue? Think about summer schools for overseas universities or overseas schools, or just providing a summer school yourself. Lots of you are already renting out your sports facilities, but can you think about doing other things like art exhibitions or theatre trips, or using your theatres for dance shows, those sort of things that you could then increase your revenue? And the other thing is about leveraging your assets. Lots of you will have lots of land. Some of you might even have woodland that's probably out of bounds to all the children. But are you actually making money out of these things? And it's worth thinking about whether you can sell parts of your land off for development, whether you can use some of your woodlands for generating income.
Thank you, Shona. I think that really leads on to us explaining that, care really does need to be taken when it comes to diversifying, because, Shona's mentioned fundraising, absolutely a brilliant way of getting more money into the schools, but fundraising can be a charitable event and can be exempt from VAT, and we don't want to be increasing too much exempt activity because that's going to prevent recovery of a lot of input VAT, i.e. the VAT on purchases. We talk about venue hire, so for the weddings, film studios, however we're going to provide that. But we need to be careful because there's a fine line between what is a provision of facilities and what is a provision of land, whether it's woodland or whether it's land in an area of the school, and that isn't automatically standard rated. So it won't fall under the standard rated provision of facilities. What we may have is an exempt supply unless the schools choose to get rid of that exemption and they opt to tax, i.e. they choose to charge VAT. For example, if they're going to supply the woodlands to a film studio for, I don't know, a Planet of the Apes shot or something that they do. So, we do need to be careful. I think, obviously, if grants are being received, grants normally, as I said earlier, they're outside the scope of VAT. That will be non-business and it won't come into the equation of VAT. And again, as we've mentioned before, additional services will follow the same liability. So if it's additional clubs after school, we need to understand what it is that's being given. The one thing that I did want to mention is the incidental supplies. So when we have got schools that are partially exempt, there is something known as what's incidental. So if it's not the main business income, there may be a way to carve out these incidental supply and just maximize what we're doing from a partial exemption perspective. So, you know, the message here is that, yeah, we do need to understand where the schools are spending the money to try and make sure that that's being done correctly. Where VAT is being incurred, let's try and maximise that VAT. And then going forward, you know, with all of the income stream, let's try and make sure they are categorised correctly. Obviously, we're here to help. Obviously, we want the schools to do well. But what we don't want is for people to just sort of think that this is easy, when what is going to be easier is for you to perhaps come and get the advice at the outset, and then hopefully things will get simpler as we go through the months and the years.
Wonderful. Thank you, Sandy. So the other element that we were talking about is obviously maximising your income. Now, a lot of schools have endowment revenues coming in, and actually this is just a reminder of the things that you should really be thinking about in order to maximise those revenues. So it's thinking about having a clear investment policy that sets your strategy for your investments, and making sure that it clearly defines where you want to have risk, where you don't want to have risk, and what your risk appetite is, so that you can actually make sure that whoever's managing your investments manage them in the right way for you as an organisation, but also in line with your investment policy, so that you're happy that your money is invested in the right sort of investments that makes you feel comfortable. Lots of charities will have investment policies that mean they don't want to invest in oil and gas, as an example, and it may well be that your school decides that they don't want to invest in a certain sector, in which case it needs to be clear within your investment plan, so that can be communicated to any fund managers that you might have. It's really important that you obviously look at your diversification of risk and actually spread the risk across your portfolio to enhance your returns. Rebalancing of your portfolio regularly is an important thing to do as well, to make sure that the asset allocation is correct and is still in line with your risk profile and in line with your investment policy and your plan. Hiring experts, I think, here is key. You know, they can manage your portfolio, they can give you advice, and those are the ones that can really help and support you to maximise those revenue. But the other important thing is also to manage that performance. And so if things aren't going to plan, or you're not seeing the returns that you're expecting, or they begin to fall, you absolutely should ask questions of your portfolio manager to make sure that they are getting the best deals for you, and also consider shopping around from investment managers as well. Okay, so it's really important that you think about it, and you're an active participant in your endowments in order to maximise that revenue, rather than just sort of leaving them with the same people for the next 20 years.
Thank you. So hopefully there was a lot to digest there, but I think the key takeaways from there are really make sure that we've got a future plan in place. You know, it is important to understand where the schools are heading, what they're going to be doing, as you've heard. We need to understand what is exempt from VAT, because that's going to impact the VAT recovery. We are recommending that you get professional help, not from a mental perspective after listening to this webinar, because obviously it can get quite complicated, but we're talking about professional help from accountants, advisors here. You know, I do pride myself in being the paracetamol to most businesses' VAT headache. It doesn't need to be a headache. You know, just try and understand what the income streams are, what the costs are, and let's try and maximise the VAT impact here. And I think with a common goal of ensuring that these fees that are going to be charged are done at the appropriate level, with the schools actually understanding what their cash position is going to be, so they can reduce those fees where and as applicable. And as we've said here on the slide, if you don't have anything in place, or you need a little bit of guidance or comfort, Shona and I would be more than welcome to have conversations with you. Our email address is there. And then we have the generic email there for hello@gravita.com. Should you wish to just not email either of us directly. Okay, so we've got a few minutes. I didn't know if there are any questions, either for myself or Shona. probably a lot to take in at this time of the day. So that's fine. I just hope that you've all got something from this. Don't expect you to have absorbed all of everything that we've said, but something is better than nothing. And hopefully you've enjoyed our webinar this afternoon. And there's more with different presenters coming up. As you'll see on the slide there, we've got UK Landlords, Where Are We Now? And that will be hosted by Tim Palmer on the 30th of October at 9 o'clock in the morning. Following the budget on the 30th of October, we're going to have our tax perspective and analysis that we'll share with you again 9 o'clock in the morning on the 14th of November. We then have a capital gains tax refresher. That will be hosted by Tim Palmer, 9 o'clock on the 29th of November. And then early December, 4th of December, again, first thing in the morning. We've got a session on demystifying Code of Procedure 8, Code of Procedure 9, alternative dispute resolution. And that session will explain what they are and how they work. And that will be hosted by Dion. So I'd like to say again, thank you very much for attending today's session on behalf of myself and Shona. And as we said, if you'd like to find out more, email addresses are there, and we wait to be inundated with all of the questions that are going to come through. Thank you very much.